Massive news coming in the last, I don't know, 48 hours. We've got Trump signing executive orders to create a sovereign wealth fund. We've got tariff drama that's happening around Mexico and Canada. Crypto is tanking and now recovering. If you look at Bitcoin, it's starting to make it recover. We're going to unpack all of that today. And as always, joined by my colleague, Mike. Together, we are Mick and Mike. Thank you all for joining. Man, there's a lot to unpack. So first of all, let's talk about the latest, which is this sovereign wealth fund. Apparently, they're going to invest in, it could be a lot of different things. It could be in bonds. It could be infrastructure.
TikTok.
Yeah, TikTok. I mean, that's what happens when you put an entrepreneur in the office, right? Like things are going to get really wacky. They're going to get crazy. They're going to be creative. Some of it is going to work great. It's going to make him look smart. Some of it can, fall flat on its face. I didn't see anything about digital assets on there. Did you?
No, I didn't. Probably just, overall the idea was relatively vague. I think the timing of it, they said, was going to be over the next 12 months. But where is the funding going to come from? Trump said coming from tariffs and other intelligent things, vague. And obviously, we'll dig into a little bit more of the tariffs. But this country is in a massive deficit. We're seeing all these initiatives that Doge is doing to cut down on costs, and whether you think they're going about it the right way is another conversation. But where's the money going to come from when we're in this massive deficit and now in a apparent kind of trade war? How is that going to happen is really unclear.
This is probably a hint to where the money will come from over the weekend. It was actually around Friday when the news broke that Trump was getting ready to impose these 25% tariffs on Mexico and Canada. And Mexico agrees to deploy 10,000 troops to U.S. border in exchange for tariff pause. So I don't know if Trump is using this as like a negotiation tactic to try to get what he wants. He obviously understands that the United States is a consumer. Yeah, we produce things, but overall we are a consumer. And
Yep.
Canada, Mexico, they essentially get a lot of our business. And so he's trying to leverage that to get what he wants. And it has been at the expense of the markets, as we saw, like they were was it 2.2 billion on tariffs-led dump. That's how much we lost in crypto liquidations. And that's crypto alone, right? We're not talking about the traditional markets.
Yeah.
But I mean, that's a lot. So there's two sides of the coin here, right? If you are looking at your bags, which I'm sure a lot of us are, you're probably thinking, oh crap, not great news. Other question is, how good is this going to be for the country? What are your thoughts on these tariffs?
I get that we want to, as a country, kind of increase manufacturing, decrease dependence on other countries for those goods. Like you mentioned, we are a net consumer overall. But I don't think that kind of like blanket tariffs for our kind of closest allies and quote supposed partners is the right way to do it. I think there needs to be a little bit more strategic about it, because look, one of the primary reasons why we don't manufacture more in the U.S. is because it's just a high cost, high labor cost, and because of that, there is, we have to import a lot of goods and a lot of raw materials. And even for the things that we manufacture in the States, we still have to import a ton of raw materials that we cannot manufacture, we cannot process here in the U.S. So, I think the blanket tariffs it's just the wrong way to go. They're not strategic. They're not, they are, we're punishing our closest partners and allies here. But I mean, overall, I think that the idea of having more manufacturing when we can do that in the US is overall a good strategy. I just don't see this being the right way to achieve that.
Yeah, I mean, there are some nuances there. Like there's I want to say 10% taxes on energy coming from Canada. So I think it's not necessarily 100%, all 25%. I think there might be some nuances there. I kind of went down the rabbit hole over the weekend, and I'm definitely not an expert when it comes to economics and history, but I was looking at the tariffs of 1816, and then you have the Smoot-Hawley tariff in like the 1930s. And in those instances, I mean, you had a pretty dramatic change. I mean, anywhere from 5 to 10 years is how long it would take to recover. And so when you're looking at the history, it's not necessarily on our side when it comes to our bags. But when it comes to making a change for the positive, yes, I do believe that this will make a positive change, but I do believe that it'll come at the expense of our current goals, our current financial goals at this time. But something has to change because you just mentioned earlier about our debt, and it's insane and it's only getting worse. And so you have a president that's in his second term is saying, look, you know what? We have kicked the can down the road enough, and I don't really care what people think of me. I mean, he's not trying to get reelected, which is a lot of times the biggest pressure point for presidents. They're worried about their popular vote. And if you have somebody that is not worried about that, they can do some drastic things in this particular case. That's my overall take on that.
Yeah. So here's the thing, like, with the tariffs, like there's going to be tremendous pain to the consumer, right? The prices of goods are going to go up when the tariffs are enacted, right? And I've seen some arguments about, okay, if we're trying to place the tariffs, and maybe we pay more for goods, but we pay less in taxes, that might balance out, or maybe, be a net positive for the end consumer. Now, is that going to actually happen is the question, right? Or are we just going to have one half of the equation where the consumers are going to pay the increased cost because of the tariffs, right? There's no doubt about that. Now, are we going to is that going to get balanced out by lower kind of like income taxes or sales taxes or something? Maybe that is in the strategy, but we don't know, because that would have to happen for the consumers to not feel the pain as much, or actually become get a net benefit from these tariffs.
It does sound like that is part of the strategy, but how long would it take when you're going through this transition of having to pay higher costs? Are you going to get that change on the tax side just as quickly, or are you going to end up being stuck, like, to your point, paying higher prices for eggs and then also paying taxes on top of that? The other side that I'm looking at is this Trump's way of trying to twist Powell's arm into lowering interest rates? Because if you have these tariffs in place and prices are going to rise, you're talking about potentially tanking the economy. And so is Powell looking at this as, well, now I have no choice but to lower interest rates, which is the overall goal for Trump in the first place?
But the way the Fed has always fought the inflation that is likely to come is to keep interest rates high. So how would that solve anything? Like how, like that if prices are high, if inflation is high, typically the Fed has kept interest rates high, increased it, and not lowered it. So yeah, I don't see that happening. Again, like, I'm not a macroeconomist, but I mean, just looking at the trends is, interest rates were beginning to drop a little bit, and because inflation looked like it was becoming into a bit more control towards the end of 2024 and the start of 2025, but that seems like because of the tariffs, the inflation is going to come back likely, and I don't see. I think the Fed changed their outlook from lowering interest rates maybe 4 times in 2025 to twice, but that was, I think, before all these tariffs happened. So maybe that story gets even worse.
And to add one last thing about that story is Trump did come out and say, yeah, I agree with Fed keeping rates as is. So yeah, I'm not sure why the flip-flop on that one, but we'll see what happens in March. And we also have some data coming out this week, unemployment, I believe. Yeah, so a lot of things to still unpack there. But let's switch over to Web3, because that's what we do. That's what we know. Is just all this other stuff impacts our job on a day-to-day basis.
Yep.
Something that came across my radar is this Apollo and BlackRock backed Securitized launching access to tokenized credit fund on various chains like Solana and Ethereum. And this is, I love seeing this, because this is the real use case why blockchain was created, in my humble opinion, which is to provide alternatives to the traditional banking. And that plays right into that particular narrative. What do you make of this story, Mike?
Overall, it's great, right? Like, I think the institutions are seeing that there are just a lot of benefits of putting these real world assets on chains. I think we're looking at kind of, we've always been talking about primarily stable coins now, and then, a little bit of like the treasuries. And now we're looking at like fixed income, private credit, different TradFi products are now becoming on chain. I think that's a great trend. And, Securitize has been far and away the leader of working with these institutions to be able to do that. And yeah, I think it also, now I posted a tweet last week, is like, I always kind of just struggle with this a little bit, in terms of like, institutional involvement in crypto. And, look, it's clearly, the blockchain rails are a way more efficient thing, ways to do things, in finance, whether it's, cross-border remittances or lending and borrowing. But like, I always kind of just struggle with, we want the institutions to be here because there's so much money there that, they can, and, they have bullhorns that and access to all these retail investors. But then, like, you go back to like why crypto was built to begin with, right? Is to be free from those institutions, whether it's, like commercial retail banks or central banks. So, I struggle a little bit with overall whether it's good and bad, but I think the more people that realized how that building things on crypto rails is a much better way to go, I think overall is net positive.
There's no way to keep them out of the game, right?
It's permissionless, right? Yeah,
exactly. And so for me personally, it's one of those things where, well, let's just embrace them being here, if that's the case. In some ways, for selfish reasons, right? Because you tell yourself, I knew it. I knew this is the reason why, 10, 15 years ago, I jumped in this space, because I saw the vision. I saw this play out. And so in a lot of ways, it's one of those things where it's like our selfish need for that reassurance. But with everything else, be careful what you wish for. That's always the case. That's
you gotta have that little level of skepticism on, what the real intentions are. But again, this is just one of the, tokenization of real world assets, the liquidity that comes with it, the efficiency that comes with it, is just one of the, quintessential use cases of blockchain. It's good to see that, it's being adopted a bit more.
More news on the institutional side. Bitwise, it looks like they got their Bitcoin Ethereum ETF approved. And I feel like this didn't really make a lot of headlines.
Yeah, I don't know. It's interesting. There's like this combined ETF. But maybe what may be more interesting is, obviously we've got the Bitcoin and ETH ETFs out there, and they've got a lot of assets under management for those. Now we've got this combined one, but there's news that there's like Litecoin ETFs coming, Ripple ETFs coming, maybe a Solana ETFs coming. So,
Doge
ETF coming. Like, are these, you just think about, is there enough demand for all of these ETFs? I don't know, but, just the, I'm sure these institutions have done their research on that, but like, are the ETF floodgates opening now? It seems so.
At what point do we look at this as more of like a marketing gimmick?
You could look at it at any point, whether it's a marketing gimmick, right? But I think we just go back like to any product, is like, who's your target audience? And it's kind of weird. Is like, I think you had kind of expected Bitcoin and Ethereum to get their ETFs, and I guess maybe Solana, XRP is a little more institutional, but like I don't know, you say Litecoin, Doge, those are interesting choices.
But the man responsible for all of this, at least previously up to 2024, has been the almighty SEC chairman, Gary Gensler. Remember this guy, Mike?
I try not to.
Well, apparently he's returning back to MIT to teach. I'm not really sure what he is going to be teaching about how everything has a security and doesn't belong in the institutional world. I have no idea, but it is a good question about wondering, like, what is he going to take a pro crypto stance when he goes back to MIT?
So it's funny. I was just reading through his kind of title and what he was going to focus on, and it was like the professor of the practice in global economics and management group and the finance group, and kind of the list of things that he was going to focus on was artificial intelligence, finance, financial technology, and public policy, right? Like, I guess you could put crypto under financial technology or finance, but there was like no mention, like specific mention about blockchain or cryptocurrency. So, I don't know what that means if I'm reading into that too much, but, I just think this is a very donk move by MIT. Like, this was where he taught before he became the SEC chairman, and this is where he, was how he spoke highly of Bitcoin and Algorand and other cryptocurrencies before he came to the SEC. And I don't know what made him do that 180, but, I think I don't understand why MIT would, I don't think they're necessarily in the business of having the cryptocurrency industry on their side. But just, this is just, it's just baffling. And Tyler Winklevoss from Gemini, he tweeted out, he's just like, we're not hiring anyone from MIT because of this, not even interns. So it's, obviously people in the crypto space does not approve.
Transitioning a little bit here, Mike, this story popped up too about Venice launches VVV token on Ethereum's base network, and they had an airdrop of 50 million tokens to users and AI projects. And sounds like, just like 30,000 foot overview, it started off great, but then once again, there's rumblings of the launch not going so well. Like, you had like some insiders had access to these tokens. I'll pause there because I know you know the details of this story, but let's break this one down here.
Yeah, I've been a user of Venice AI, and it's Eric Voorhees' project. Many people know him. He's a big Bitcoiner, big on privacy. That he founded Shapeshift. His Venice was it was espousing kind of privacy around your AI usage, right? It doesn't store your data, and like many other the AI models, like OpenAI. So yeah, they launched their VVV token, and there was a lot of people use Venice AI, and it was a good tool, good decent models and good outputs, and it pumped right away. So going back to what you mentioned, like half of the $100 million tokens were claimed airdropped to Venice users and other decentralized AI projects, like some of those agent projects out there. And out the gate, I think it started at a market cap of like 20 million and just shot up to 1 billion. And then the wheels kind of fell off. I was trying to follow it over last few days, and apparently it started so they launched VVV was on base, and they launched it on Aerodrome. Aerodrome was their launch partner, and there was like an insider trading scandal where there were a couple of Aerodrome employees were accused of purchasing the token, a big bunch of tokens, before any public announcements were made about the token. So I think they turned 50K into like over $1 million because of that. And then even though and then so like, the news around that started disseminating across crypto Twitter. Then the token kept going down, and then apparently they were pretty clear about the team allocation, where I believe 10% of the total tokens were allocated to the team, but 25% of that unlocked immediately upon launch, and then teams started dumping. And yeah, from what I looked at it, the price of it was at one point, when the market cap was like $1 billion, it fell down to I think it definitely got below 150 million, maybe even lower, and then it's starting now to recover a little bit. So certainly a tough start, but I will say that it is a real project run by a great builder in the space, a very good marketer, and it had a live product that many people use. So I think that long term it's likely to do pretty well. And I'll say, like, I've got a small bag of EVV to disclose that. But yeah, certainly not a great start.
And this is not the first time we hear about launches not going well, where the tokenomics is a little bit off. There's like some insider, and that doesn't take anything away from the technology. But if you're like somebody on the retail side, it's got to be frustrating, because you may think that you understand the technology, you understand that this is the narrative, this is really good use case. But if you don't quite understand the tokenomics side of things, I mean, you can be in trouble, or maybe you have the wrong expectations, right? Like, to your point, you said this is a good long-term play. And so whenever you're messing around with stuff like this on the retail side, you probably have to think about it as, is this viable long-term versus just like trying to make a quick buck in the short term. The dangers of that, in my humble opinion, is this technology moves so fast that you have no idea if it's going to really matter, 2 years from now. What are your thoughts on these challenges?
Yeah, if you look at, you've got crypto and AI, two of the fastest changing industries out there, two of the most important technologies out there, and there's constant experimentation. There's, you just look what we talked about last week with DeepSeek coming out of nowhere, right? And screwing up the markets, right? So you're right. There's no way to predict this stuff and to predict what's going to happen. But even then, like, a lot of time it depends on what your time horizon is, right? Maybe you believe that you can, trade the real time markets, and you've got that information, or that speed to be able to react to it. I don't. I'd be the first to admit that I don't, and that's not really what I'm interested in. So I look for other things when I make investments, whether it is venture investments, like we'll talk about soon, or just token investments, right? You still look at the team, you still look at the product they're built. Of course, tokenomics will be a factor in terms of your timing. But there's always unlocks and things along those lines, and you want to make sure that the allocations are legit and don't favor certain insiders or certain KOLs or anything like that. But yeah, I have a very long-term view on the industry and on the investments that I make. So it just really depends on what your time horizon is.
And that's why I certainly appreciate all of your input when it comes to just your takes on the technology, and also just on the funding side, because every time we connect, you bring to me 3 projects that have gone through a funding round. And for all of us, it's a great way to understand where the market is going, where the technology is going. But obviously, all of this is speculative. Like, obviously, none of this is financial advice. But again, from a technology perspective, it's always interesting to just see where things are headed. So, Mike, let's start with Humanity. Looks like they secured, how much was it? 1.1?
No, they raised 20 million. They raised 20
million at a 1.1 billion valuation. Is that correct?
Yes, yeah, that's correct. Yeah. So yeah, they raised 20 million. The round was led by household names, Pantera Capital and Jump Crypto. It's a valuation of 1.1. And Humanity Protocol is like a competitor to WorldCoin, right? So they do decentralized ID instead of authenticating through an orb that scans your eyeball. They do it through palm scanning, which I actually looked at a while ago. I looked at possibly investing in a palm scanning startup. This was outside of crypto, and like, yeah, that's a really strong, non-invasive way to identify a person that's very dependable. So taking a different approach from WorldCoin, and I think you can do it a bit more without having this like big orb in your face. You could do it with relatively smaller technology, palm scanning technology. So yeah, good competitor to WorldCoin, and a pretty big fundraise.
Yeah, and maybe less creepy, right? Where you're not scanning an eyeball, like you said.
Right. Yeah.
Interesting one to keep an eye on. The second one is more on the ZK side. With is it ZK proof technology is what they utilize? Irreducible, is that correct?
Irreducible. Yeah. So they raised even bigger, around 24 million from again, other household names: Paradigm, Bane Capital Crypto, with participation from Fembush Capital, Robot Ventures, and others. So what's interesting? Look, zero knowledge is a core technology in crypto right now to be able to prove things without showing the underlying data. So we're seeing this being used across everything, just for scaling purposes, for privacy purposes. Now for AI across data privacy and verifiability. But what's great here is that sometimes ZK proofs, there's a lot of compute power that's needed, and what Irreducible is doing is they're actually running their own hardware, their own bare metal infrastructure that's specifically optimized for these cryptographic tasks. So it enables much more higher performance proof generation for the latest ZK proof technologies. So it's always hard to do hardware, but really that's the way that if instead of kind of spinning up some AWS instances or Google Cloud instances, they're running it on their own. So it's they can optimize that for performance and get these ZK proofs operating at a faster pace with just improving that technology for like Polygon, ZK EVN, and some other chains and technologies that are coming up.
And they're also backed by Jump. I just noticed that.
Again, okay. Jump too. All right.
Yeah, interesting. The next one was a bit of a surprise for me that you bringing this to my attention, because this is a meme coin. Yeah. This is essentially like a pump fund, right?
Or a cross-chain pump fund. Yeah.
Okay. Yeah. Okay. So the value proposition here is that it's cross-chain.
Right. Yeah.
Okay.
So Printr, essentially, cross-chain pump fund, meme coin launchpad. They raised $2.5 million in a pre-seed round from Axelar Network. Makes a lot of sense. They're using their cross-chain infrastructure, and Bitscale Capital and others. Allows users to issue and trade tokens across over. I don't know if this was specific to crypto. It was like over 69 blockchains that they put that into the announcement, with a single click, right? I guess pump fund's not enough. Now we need cross-chain pump fund. But look, it's it's where the demand is, right? Like I'm sure a lot of people are going to use it to launch meme coins. And then bringing them cross chain to expand across different wallets and different ecosystems. We're all about free markets here, and whatever users want to do, build for them, and we'll see if there is a demand for cross chain meme coins instead of just on mostly on Solana and Base right now.
I see that on their website. You can join Sol EVM, which EVM I'm assuming is most likely Base, and then you can also join Sui, which is another up-and-coming network that has pretty decent meme coin activity relative to its size. The most important takeaway for me is the fact that the infrastructure is able to support this type of technology. And so rather than looking at these like specific meme coins, I'm more interested in understanding like how are these networks able to support such high volumes. And personally, I think we may have touched on this. I think the Fidelities of the world, they're watching this and they're seeing this go down on some of these chains, and they're wondering, okay, that's interesting to keep in mind from like a transaction perspective.
So actually, just another kind of tangential story. So there was a meme coin called Jelly Jelly. I forgot, they were the founders of, I want to say Venmo. They launched like a social app called Jelly, right? And they launched a token to essentially, and I'm sorry, I'm kind of misinformed about this, but like I think it was launched on Pump Fund.
Yeah,
but right, and just to kind of like use it as a marketing tool for the app, right? And you have to use Jelly to, I believe, to use the you have to use the Jelly Jelly token to use the app or pay for services. But yeah, it's now becoming kind of like a way to go to market with an application. And crypto has always been kind of that coordination mechanism. Whether it's like staking for the security of a layer one chain, or payments or whatnot. But yeah, now it's there. Pump Fund is being used for like apps to go to market, gain attention. Certainly you saw that the chart with Jelly Jelly was just like just dumped really quick. But it's just another way to use what's Pump Fund was just a meme coin launch platform, but yeah, now people are using it to kind of just gain attention for other things that they're building, which is obviously a very interesting use case and a trend to keep an eye on.
It's almost like before we would ask, well, what is this token going to be used for? And now we're not even hiding it, right? We're like, okay, we're just going to use this token to raise money, and then we're going to build this out and go to market with it.
Yeah. Again, yeah, it's permissionless. Obviously you want to avoid all the scams, and everyone's got to do their own research, but just the different ways that tokens are being used, as whether it's incentive layer, a attention mechanism, a funding mechanism. It's fascinating.
Yeah. Well, that about does it. We covered a lot, but before we let you go, let's talk about a few things. Number one, I run a Web3 community of professionals, which Mike is also part of, called Network Spotlight. So I'm going to include a link in the description. So if you would like to join, feel free to do so. Secondly, Mike runs a venture capital fund called Deep Ventures, and they put out an amazing newsletter talking about the different projects that raise funds. We just cover only part of what we see. But if you want to check out the newsletter, I'll include the links in the description as well.
I love it. We're here every week talking about all the crazy stuff happening in crypto, and it's hard to keep up, but we try. And hopefully, us talking about it helps keep everyone else up to date and informed.
Yeah, definitely. Please like and subscribe. Share it with your friends so they can also be informed. And we'll catch you guys on the next one.